from 7 to 8 p.m. Bring any questions you have here. Today we're going to talk about probably a little bit of real estate investing, probably a little bit about the state of the market, specifically related to how hot things are right now. Here in Ontario and Canada, our real estate market is up about 41% in southwestern Ontario in London, markets like Windsor and London, even pockets like Sarnia and all of surrounding London area, up insane amounts. By the way, guys, if you're in the stream, just give me a thumbs up and jump in the comments. Just crazy. I was looking at some of the data around sale prices for everything in London. It's just insane. Like properties a year ago, 30 to 40% higher than they were. Most people buy properties at 20% down. So that means most people who own property have made, here in London, Ontario, a 5-to-1 return on 40% is 200%. Now imagine if you own two properties. Like it just insane how much money is flowing in the real estate market right now and how cheap debt is. It has me worried, I'll be honest. I'm cashing a bunch more properties actually. And I just feel like, I don't know, I just don't feel like it makes any sense. Like to buy a rental property right now, whether it's commercial or residential, at these cap rates, there is no real cash flow. Like, I guess it's all predicated on these like 5-year, 1.5% variable mortgages. And if interest rates rise, there's no cash flow. Who's doing sensitivity analysis and all this and factoring in property management and all the other legitimate real expenses? I don't think people are doing it right now. So anyway, I'm going to talk about that a little bit today and why we are where we're at. Part of it's the printing of the money that the government's doing. But the other piece is look at the S&P 500 right now. Look at the returns people have seen. Oh, I'm just going to sit down here. Oh, sorry, I banged the table. I think a big piece of it is, the more I look at the return I'm getting in the real estate market and I compare that to the returns that I can get options trading in the stock market, I'm like, what am I doing owning real estate? Like at a 6 cap, that's levered 5-to-1, and best case scenario 25% ROI. I think I can do better than that with more liquidity and better safety. And I don't know, I just don't see the allure of, when you're real estate investing, all of your rental income is at the top marginal tax bracket within your personal name. Now, if you could open up a corp and trade, like actively options trading or investing, and maybe the ethos is you're looking for long-term growth and you're a bull. So you're betting on the long-term growth, which is a smart strategy because long-term stocks go up, right? Especially if you're diversified and you're safe. You could trade them, even if you were to even just slightly outperform the S&P 500, the tax advantages alone, beyond the $100,000 in dividends I talked about last week that you can earn as a couple tax-free. Let's talk about how active stock trading is treated. So if you had a corp and you actively stock traded, you could hire an assistant to track all your trades. You could, create a bot or hire an assistant to do trades for you and execute along a certain strategy. You could hire a bookkeeper. You could, in theory, have a home office you could write off, a whole bunch of expenses, a brand new, state-of-the-art trading computer, a couple of TVs, maybe your internet subscription, your cell phone if you're on your phone, a new phone maybe, an iPad to help you trade. Lots of things you could expense, workshops and seminars. Maybe they're down in Florida. Maybe they're in Costa Rica, retreats to help you clear your mind to be a better trader. You could design a lifestyle around a trading business. And trading business can be done anywhere in the world on your phone. So that's really appealing. And in Canada, small business deduction on an active business would mean you're paying about 12.2% in tax. So a 12% tax rate on active stock trading. Real estate investing is considered passive income, all rental income, profit taxed at 50%. So 12% versus 50%. Much more attractive of an active stock business than it is to have an active real estate business, unless you have 6 employees or more on the real estate side. But most people don't have more than 6 full-time employees managing their real estate portfolio. So if you're smaller than that, which is 99% of all real estate investors, the tax, consequences of owning a real estate business are not advantageous here in Canada. There's just not the same benefits that you have here owning real estate for cash flow versus building an active stock trading business. So you'll see over the coming months and years, I'm shifting from, working on my rental properties and, managing that and shifting that wealth, which by the way, I think is at all-time highs. It may go higher. The government continues to print money and there's a ton of pent-up demand because there's no supply. They're stopping new builds. The cost of materials are through the roof for lumber, concrete, all those construction materials way up. And that's having, big consequences and impacts on the price of everything related to real estate. Is just driving prices up. So I'm cashing in on some of that. I've been cashing out slowly over the last 2 years, and this year, again, cashing out even more. I don't know when, said bubble will burst or if it ever will. Maybe here in Canada, people are just used to, as an example, my house here is going to be hitting the market. My house it's a nice house, in Byron, but it's not a mansion or anything special. And it's probably worth $1.2 million. And, I bought it a couple years ago for all in with renovations around 750,000. It's crazy how in such a short amount of time, the prices of everything has gone way up. Someone earning $100,000 a year of fixed income, on a salary, they can't afford even half the house that they could afford before. So I don't know. In my opinion, this is just not sustainable. It's only fed right now by a ton of excess printed money in the economy and cheap debt, as well as combining with the fact that there's absolutely no supply and a shortage on all construction materials, which again pumps the real estate market. So I think this will eventually come to a head. Similar to the crypto mining space right now, there's a shortage of components like graphics cards and power supply units. The scalper market there, where people are reselling graphics cards and power supplies and stuff, that is double and triple MSRP in some cases. The same is basically with real estate right now. There's just no supply. So if you have supply, people will sometimes pay 30-40% over build cost. And I think that's I was buying in 2017, 2018 at below replacement value. I was buying buildings here in London for 180 grand, 190,000, in the east, in rougher areas of town. And these properties were below what I could build for at the time. And then build costs went up 50%. So I've been cashing out because in my mind, take the gains off the table. The question I always ask myself, and people, message me all the time on Instagram. They're like, hey, here's my long story. And they tell me their life story. And I do my best to read it all. And then they say at the end, I have a rental property. It's worth $1 million now in Toronto or whatever. And should I sell it? And the place I always start is I'm like, would you buy a property with the same cash flow, the same rental income you just described to me? Would you buy that right now for what you just told me you could sell it for? Say it's $1.1 million, whatever. And they're like, no, I've never paid $1.1 million. I paid $300,000 for it. And I'm like, right. But every day you hold that, you're choosing it's the same as you saying, I'm going to buy that at 1.1. If you wouldn't buy your property at market value right now, you probably, unless it's your primary residence and you make an argument why you should have it, whatever, that's fine. It's a different situation than a rental property, right? When you look at a rental property, it's just about the numbers. It's about the math. And if you wouldn't buy the property right now at market value, sell it, period. Maybe there's some consequences related to tax you might want to think through. Maybe there's some other, emotional factors, but investment-wise, if you wouldn't buy it today for the price you could sell it for, sell it. And I'm looking at my portfolio, and I've got properties that we've got, one duplex coming up on Oxford and Adelaide area, and it's, I just converted to duplex, and I'm looking at it, and there's a 2-bedroom unit and a 1-bedroom unit. It's got 3 washrooms across the spots, and it's got 8 parking spots. It has commercial zoning. Someone who's really keen to run a business there or something, or house hack it, or is just desperate to get a detached property in London, might pay almost $500,000 for this property at Oxford and Adelaide, just east of downtown. And I'm looking at that, and I can rent it for maybe, I don't know, maybe $3,300 a month, best case scenario, maybe a little bit more on Airbnb. But I'm looking at those numbers, and I'm looking at a $500,000 valuation, and I'm like, there's no real cash flow here. Very little, not enough for it to be worthwhile for me, for the amount of equity I'd have to trap. To buy that 20% down with closing costs, etc. Maybe a little bit of startup capital to furnish it or whatever. I'd be in it for almost $125,000, $130,000. $130,000 stock investing with options, I can generate about $2,000 a month in cash flow on 130 grand. If I use leverage, I could probably generate a little bit more, maybe $2,500 a month, pretty consistently. That's cash flow, and probably a little bit more. That's me cashing in on a lot of the appreciation, but I look at that, and then I look at the property with the same amount of equity in it. It generates me like $300 a month. And I have stress on my phone. I have 100% liquidity. I can't sell that property easily. It takes time to prepare a property and list it, etc. And I'm fighting with tenants over here. Here I'm fighting with nothing. I click a button on my phone. It's hard right now, and like this is a totally different environment from where I was looking at real estate, 3-4 years ago, right? And like right now, sorry, William, we're talking about comparing real estate to trading right now. And like 3-4 years ago, when I was looking at buying rental properties, I'd buy that same rental property for 150 grand, convert to a duplex, I'd be all in for 200 grand. And I'd rent it for 2,800 a month, let's say back then, because rents were a little bit lower, but not that much different. I'm looking at that cash flow. I was like, with a low mortgage and, low property taxes, whatever, I'd be looking at like $1,500 a month, 2 grand a month. I'm like, okay, 2 grand a month plus appreciation, great leverage, really safe asset to park my money in. That made a lot of sense. But now today at these valuations, it just doesn't make sense. Like for a primary residence, yeah, like, the new estate that we picked up, that's a great buy. Your primary residence is tax-free and it's a great vehicle to ride the appreciation. You need to live somewhere. And for me, I like to have control over my primary residence or where I live, so renting just doesn't make sense. I tend to customize everything I live in, and so a landlord wouldn't want me to do that, right? They wouldn't want me to customize. So just for me and the way that I am, I'm always going to own. And so this estate that I've taken on, I think it has the potential to make me, $1 million over the next 10 years easily tax-free, right? Just the appreciation alone, plus some opportunities to strategically make the property better than it is now. And anyway, so that's what I'm really excited about with my new house, the new mansion that we're picking up. I'm super excited about that opportunity. But beyond that, and beyond flipping real estate, by the way, I think flipping real estate is still a great way to, you can still find tons of properties under market value. You can buy stuff 80 cents on the dollar. Buy real estate. Just don't hold it. I can't see a good argument for holding real estate when there are so many other opportunities. The opportunity cost of holding real estate in this market right now is too high. The other opportunities that exist are just better than what's there in the current market. So I made my brand, I made my name, I made most of my wealth. I made some of my wealth outside of real estate, but probably like 70% of my wealth, 80% of my wealth has been made through real estate, maybe even more than that. And I know it's crazy. Everyone's like, Mike Rosehart, the real estate investor. All I'm doing now, I bought 2 properties in Sarnia, and I'm gonna flip them, because when I'm all said and done, I bought them for a great price, by the way. Like, fantastic to pick up these 2 properties, and I'm helping my brother out. Me and him are doing them together, so that's fun. My stepbrother growing up, and me and him getting to link up, and me helping him to grow and elevate and rise up. That's been really cool too. So I've been using real estate as a tool there, and again, really under market, But hang on. Oh, some good questions here. We'll get to in a second here. Some great questions about leverage. And I want to talk about leverage because leverage is still an essential cornerstone to everything that I've done and every business I've bought, my stock investing strategies, and real estate, of course. That's why I was attracted to real estate. Less attracted to real estate now. I am still attracted to find under market opportunities, but holding them, very few opportunities that I really want to hold right now. And even my own portfolio, I'm looking, I got a couple properties that I would like to get rid of, and I'm like, my breakout fees on my mortgage, like I have old mortgages at like 3.49, and now I can refinance at 1.49, let's say, right? And that 2% difference in interest rate is huge, but the breakout fees are 30, 40,000. So in some cases, it doesn't make sense to get rid of the property because of the capital gains tax. I bought the property for half of what it's worth today. I can see arguments for keeping property and slowly selling a few off rather than selling them all off at once. So I can see an argument for holding real estate where you're like, hey, I'm going to sell this property, but it's going to be 3 years from now or 5 years from now. I get that, right? I'm doing the same things, but where it makes sense to get out, I'm getting out. The prices are very, very favorable right now. And so I think that there's a lot to be said about cashing out when things are on the upswing. Who knows what can happen in the future, and take some gains off the table and diversify. So that's what I'm taking the opportunity to do. And more, I still buy for cash flow. If I'm stuck with those Sarnia properties, I bought a duplex for I can't remember the price now, 165,000. So again, it'll rent for $2,500 a month. It's well over 1% rule in Sarnia. I grew up in Sarnia, so that's my stomping ground. And I'm there only because there's just less competition and the market isn't as hot. But again, I'll probably flip it because the market value would be like 325 when we're done, or 350 when we're done. And so within my corp, I have to look and say, as a flipper, my tax is 15%. It's not so bad inside of my corp. it can make more sense to flip than to hold. I don't know. Like I'm running the scenarios. Maybe it makes sense to keep it if it has strong enough cash flow. Here in London, there's pretty much nothing that's decent and turnkey that I wouldn't want to sell. And so that, yeah, I mean, it's a lot of work to sell. So I got to come up with a plan to sell all my properties off slowly, one by one. Hi, how you doing, Yishi? How you doing, Mr. McKell? Do you have two greetings? How you doing? Hi, do you promote YouTube channels? No, I don't do any promotion. I don't do any collaboration videos. I get offers though. Like had someone offer me $1,000 to do a video with them, like just kind of interview them. And I've done a couple interviews like a couple years back, but I don't have the capacity right now. Like I don't have a video crew. I don't have an editor. I don't have the drive to do that right now. I can make $10,000 in a day, trading. And so it's hard to want to make $1,000 for like a day of work on the YouTube side. Because trading takes a couple minutes and creating a video and meeting up with someone, it's a lot of work. Right now, no, I have no interest in doing any promotions. I just, free content for everyone. Come on once a week. It's low commitment for me. It's a lot of value for you guys. So that's a win-win. Let's keep what we've got going with the Mike Rosehart show, but I'm not creating any videos right now. So all my old videos still out there. People still watching them. Hopefully they're still adding value for people. Everything pretty much still holds true of what I've said, theoretically speaking, on most of the content I've taught about in the past. The problem is that people, so I'm reading another comment here. The problem is that people jump into anything real estate, then put zero money in and expect twice the rental value from it, and people are paying it. So I think what you're saying is that people think that the house is paid for by the tenant, and that might be true, but if you back out how much money you have to put into it, because there are no zero down deals, it doesn't really exist. You could borrow money from someone else, but then you have to pay that money back at some point, right? And so there is no such thing really as a zero down deal, especially not in London that's cash flow positive. Very rare to do a zero down deal that's cash flow positive. If you're doing your first deal at a 5% down, remember your 5% down payment is gone in an upfront CMHC or Genworth, all those private mortgage insurance. Here in Canada, private mortgage insurance is very expensive. And so there are, I think that there are situations where the 5% down makes sense because you're not tying up a lot of capital and they can make a lot of sense for a long-term hold. But for a short term, if you ever want to refinance the property or sell the property, you're screwed because you just paid a huge fee up front. It's actually cheaper to go borrow the difference between 20% down and 5% down from a money loan shark than it is to take the private mortgage insurance option with CMHC here in Canada. So anyway, the zero down deals, they just, there's a lot of fees associated with doing a zero down deal, and even the vendor take back stuff, if you get super creative, most of the time that carries a high interest cost with it, which can eat into a lot of your profit. Now, if your time is worth less than $30 an hour, I can see the argument for wanting to get into real estate investing because your active time in property management and in, if you do Airbnb management, or let's just say it's a standard rental, just your time to do maintenance, management, leasing, like that's tenant placement, et cetera, and so forth. If you're doing all that work to manage that asset and have it, outperform because you're doing a good job managing it, then yeah, I could see you could get some good cash flow for inputting your time. And yeah, I mean, I did a lot of that when I was starting out and it made a lot of sense. Now the cap rates are just half what they were before. And so the pay you're getting per hour is just half. So it's the same amount of work as it always was, but just half the pay. And so that's hard for someone like me to swallow because, in 2012, 2015, 2017, 2018, even sometimes in 2019, I was getting paid double what you'd get paid now to manage a property and to, do all that work. So I think it's just not as juicy for the investor as it was before. And so I'm less attracted by the buy and hold real estate strategy. I just don't think, I know people that are buying big multifamily stuff right now, and a lot of them are looking at the break even, or they're buying stuff right now for future potential when they change rents over and, get the rent roll up. And their, friends are buying at negative cash flow. And they're like, hey, I just bought a big building. It's, we're going to lose $2,000 a month cash flow, but like the lift in 5 years is going to be huge. And I'm like, okay, a lot of work, no money now, maybe some money in the future if the market continues to be hot and you can do all the things you said you were going to do, which is, again, a lot of work. You're buying yourself basically a business, and it's not a very profitable business. It's a safe business, it's a stable business, but not a profitable business. So I don't know. I'm less attracted by real estate than I was years before. That doesn't mean I didn't buy a sixplex this year in January that made a ton of sense right on the corner for me here in Byron. Yeah, I did. So people are gonna jump in here and the critics are like, hey Mike, you're still buying. Yeah, I am. But only where it makes sense. And there's very few of those opportunities these days comparatively to what I was seeing 2-3 years ago. So I think the market is very hot. This level of heat is not sustainable, period. So we need to have things pull back, calm down. Maybe it's not a correction. Maybe it's just things slow down. I don't know. It's more likely that we won't experience a correction, that prices won't fall, because they're printing so much money. The M2 money supply is just keep printing so much money. The value of our fiat dollar is just, dropping relative to hard assets. So the buying power will probably be the same in 2 years, but I don't think the price of houses will be the same. It'll be all relative, I guess, if the money loses a bit of its buying power. But we'll see what happens. I don't know. I think that a lot of people out there. Someone just put a comment in. Thanks for telling us how it is, and everything you're saying is like bang on. Appreciate that comment, by the way, because I think a lot of people in this space, a lot of real estate people in this space, are trying to raise capital for their deals, or they're trying to find JV partners. And I'm not trying to do either of those things. So when I say something, that I have no ulterior motive behind it. This is just literally what I think. This is a guy who's had 60, 70 properties, who's been in the trenches, who is actively looking at what's going on in the market and talking to people. And this is what I'm seeing, that there is a lot of heat right now, and a lot of it's driven by, like I said, the high cost of construction, the tons of immigrants that we're taking into Canada right now. There's just so many that it's driving, there's just not enough supply to handle things. So I think that this could end, I don't know. I mean, there's one way this could just keep going up. We could have a bull market for the next 5 years. I saw an interesting stat the other day. I shared it on my Instagram at Mike Rosehart. If you're not following my Instagram at Mike Rosehart, you should, because I post a ton of great stuff there on Instagram. But and it's the best way to get a hold of me. I was watching a stat about real estate all around the world, and if you look at all the different countries where you can compare the different real estate markets, Canada is the #1 appreciating real estate market in the world, and Ontario, specifically around London, is the best in Canada. So I actually live and have lived through one of the best real estate bulls anywhere in the world. So super thankful for that. But it makes me want to pause and think, what is so special about Canada? I see us printing so much money. I see us in the biggest deficits. I see immigration, at all-time highs. It's possible if we continue to print money, which devalues our dollar, and we continue to let in a lot of immigrants, and we continue to constrict supply with lockdowns. By the way, we just went into another 30-day lockdown today, tomorrow is our official start of another 30-day lockdown here in Ontario, which means no restaurants, no nothing, stay-at-home orders. That stops all construction, stops everything, and that just constricts supply even further. No more, duplex conversions, no more new units being built, no more apartment buildings, no more new houses being built, and all these people they're still opening the floodgate for immigration. They're like, COVID's a big issue. We need to stop, the spread of COVID. But let's take in 100,000 immigrants from random countries like, wherever, and China and India, and just see what happens. It's like, makes no sense to me. Anyway, I get where they're coming from. They want to bring more people into Canada. It's overall net good to bring people in to pay more tax. I get it. I get they want to print money too. Like there's no downside to the government printing money. I mean, if they keep interest rates low and print money, it's just a good old ride straight up for everyone. I mean, house prices go up, stock prices go up, businesses have lots of money. Money's just flowing in the economy. The more they print, the lower they keep interest rates, the more they constrict supply, the better it is for everyone. I mean, the guys making the decisions are making millions of dollars by locking things down. It's actually an overall net positive for a lot of the big businesses and the overall, stock market, etc. So I think that it's one of those things where, to answer your question, I saw it pop up. No, Canada doesn't have a low birth rate. We're pretty good, actually. We're in a bit of a baby boom, actually, right now. And I was looking at that stat the other day because I have 3 kids, and looking at that stat about people waiting to have kids, but we're actually a bit of a baby boom right now. So I'd have to look at the exact numbers, but I remember thinking, we're doing pretty well. So we're not like Japan or something where we have a declining population. Like Canada just wants to grow from, near 40 million people to 100 million, I think, in the next few years. And so I don't know if our social system can support that with our free healthcare and everything else. There's going to be some major taxes coming down, and hopefully they bring in enough wealthy immigrants to pay all that tax so they don't have to come down on people like me to pay it all. But I may be gone from Canada if they institute some of the talk about 70% tax rates and getting rid of the half tax-free capital gains exemptions and stuff. If they get rid of that stuff, that's going to drive people like me who produce in this economy and employ people, it's going to drive us out of Canada. But we'll see what happens. I think it's very likely the government will continue to force prices up for real estate, stock market, etc. The real underlying buying power of that dollar is not going to increase a ton. So I think that all the prices will rise, but you won't have that much more than you would have before. The people who are most screwed are people on fixed income and salary. I think are going to feel it the most. But anyway, let's get to the Q&A here and blast through some of this. My buddy sold his house in Etobicoke for $3 million, and I think it's $3 million, and it's just a regular house, nothing special. Crazy, Aaron. Like, just crazy. Etobicoke is, it's an amazing market, and it's super hot. Like, a junky semi there is like $1 million. It's in the Greater Toronto area. And yeah, I mean, the market's just on fire. The thing is, those people sell their average houses for $3 million, and they're like, oh, I can work from home now because, COVID. And they're like, oh, maybe I can move to London. London's only an hour and 40 minutes from Etobicoke. Okay, I'm gonna have to come into the office once a month or once a week. I can make that commute. They take $3 million, and $3 million in London still gets you a beautiful mansion estate. So there's that driving force to move further out from the major metropolitans, and I think that's a trend we'll continue to see. Hopefully the new immigrants coming in, they'll stick to the major metropolitans where their friends and family are. So I think we'll see more of that, places like Toronto, Montreal, Vancouver, maybe even a little bit of Calgary, the major hubs, right? So yeah, I mean, that's just a trend that we're seeing, and I'm seeing that too. So much of a headache too. Corey, 100%, as your time gets more valuable, you realize that I just don't want to be dealing with, property managers and fighting with tenants and all that kind of crap that goes along with that. You can't pay me even $100 an hour when I do that. So why would I want to do it for $40 an hour? William says, good evening, Mike. Are you still finding good deals on the market? And if so, what do they look like and what kind of yields are you picking up? So very seldom, very far and few between when we're talking real estate. I think there are sometimes opportunities that are mispriced. The sixplex we picked up was mispriced. The couple of properties we got off market in Sarnia were, in my opinion, mispriced. There was some value add that needed to be done. They weren't that mispriced, but there was some strategic value add that could add big time money. And so there's opportunities that I couldn't say no to. How-to says, I wouldn't buy 3 of my rentals at the price I could sell today. So that's a very interesting question to ask myself whether I should sell. Rental income has nearly doubled in my area too. And interestingly, How-to, you have to run the numbers and say, if your prices have tripled in value, but rents have doubled, and you're still stuck with old rents, and tenants that you can't easily evict, it might make sense just to sell the property and then someone else can buy it and owner occupy it. And you can't kick the tenant out, but the new occupant is going to owner occupy. So they can kick the tenant out, right? And so it might not be that valuable to an investor, but it's really valuable to a home buyer, as an example. So sometimes there's opportunities where you can walk away from a property net of tax and get a better ROE, return on equity. That's what I'm looking at, is what is my return on equity? And if I have a lot of equity in a property that I can't refinance out or can't get out for whatever reason, and there's always gonna be some equity trapped. The best case scenario is like a 20% of the value of the property is trapped in equity, right, for market value. But if you haven't refinanced recently, it could be 40, 50%, 60% trapped in the property, which is a terrible ROE or ROIC, or return on invested capital, or return on equity, same thing. So something to think about when you're looking at your portfolio. A lot of people don't sit down and analyze their portfolios the way they should. Brian says, hey Mike, quick question. What's the math behind the 1 to 3.34 leverage with the investment brokers? You're talking about interactive brokers. So the way it works is they will lend you 70% loan to value on a list of blue chip companies in the US and in Canada, pretty much all the major banks. Look at like the S&P 500 list, basically, TSX, pick like the best, couple hundred companies, they'll be on that list. You can go look at the list yourself and see. But the idea is these companies have a certain amount of security baked into them that interactive brokers can go get at bankers' acceptance rates. They can go and basically lend you, and they don't make a big spread. They're cool with making almost nothing. And they basically will lend you near cost to get the trading fees. So that's how they make their money. And they'll lend 70% loan to value. But if you just, let's say you had $1 million and you got a 70% loan to value line of credit from interactive brokers, you could take that money out, go buy real estate, go buy a business, whatever. You can put $1 million in stocks, interactive brokers, they'll give you 700,000 out at, less than, I think it's like 1% interest. The more you borrow, the cheaper the rate gets. So it gets down to 0.5% interest, but maybe it's 1.5% interest to start, and that scales down. So prime minus, 1% on average. So anyway, so prime minus 1% is the interest rate they're lending you on. But instead of just taking that 700,000 out, you can take the 700,000 and buy more stock with them on the approved 70% loan to value list. You buy more stocks. You put the 700,000 to buy more shares. So now you have 1.7 million in shares. 1 million of your own money, 700,000 borrowed from Interactive Brokers. But you actually have 1.7 million in total shares. So Interactive Brokers recalculates and says, we'll give you 70% loan to value on your 1.7 million. So we'll increase your line from 700,000 to, and there are 490,000 added to it, right? So now you have, $1.2 million in line of credit. So then you take the extra 490,000 that you just got access to because you bought more stocks, and you buy more stocks. And then they'll give you 70% of that back, and they'll keep increasing your line of credit. And the math works out to you being able to put $1 in and buy $3.34 of stock. So $1 million buys you $3.34 million in stock. Now you don't want to lever up all the way because you might get a margin call unless you have huge lines of credits available, or you can handle a margin call. Margin call means they will force the sale of some of your shares if they drop in value so that they can keep their 70% loan to value ratio because they don't want to be over that amount, right? So if the stocks fall 10%, you're gonna have to cover that difference off your line, right? So maybe you go 2.5 to 1. So 1 million buys you $2.5 million in shares. It's still amazing, right? Like if you just put $1 million in an Interactive Brokers account right now and bought, say $3 million in SPY, so the S&P 500, you'd be up in the last few months, you'd be up 10%. Like you'd be up $300,000 just in the last few months by putting $1 million into that. You put $1 million in real estate, you wouldn't have near as much total gain. So you get more levering up and buying the S&P 500 at Interactive Brokers because your cost of debt's 1%. Whereas in real estate, it might be 1.5%, 2%. So it's actually cheaper leverage, cheaper debt, similar loan to values as what I'm getting on the commercial side right now. I find it's more attractive to buy REITs or buy blue chip stuff than it is to actually buy real estate. Like you could just lever up 3.34 to 1 and buy REITs, which are already levered. So you can buy a REIT that pays a 10% distribution or an 8% distribution, and 3 to 1, that becomes a 24% distribution. So you gain 2% return a month on a REIT that you bought in Interactive Brokers levered up. That's buying real estate. You could buy a REIT that owns all real estate in GTA area, whatever. And so you'd be investing in real estate in the same way as if you just bought it yourself, but getting a better return than if you bought it yourself for no work. That's why I don't want to buy real estate right now unless it's undervalued. Like I don't want to buy anything close to market value. If it's close to the current MLS price, what you can sell it for in the open market, I don't want it. It's too much work, not enough profit. That's where I'm at right now. I'm looking at good return on capital. I'm not looking to park money and just get a crappy return. That's not me. I get that some people in retirement are cool about that. It's the same reason people pay down their mortgages in retirement on their primary residences, etc. It's a bad return. You're guaranteeing yourself. Let's say your mortgage is at 2%. You're guaranteeing yourself a 2% return. That's terrible. If someone was like, "Hey, you want a 2% return?" I'd be like, "No, not a chance in hell." And with the amount of money they're printing right now, I'd borrow as much as I possibly could from the bank because the money you have to pay back to the bank isn't worth what you borrowed. You pay back less. So I don't know, conflicting lines of thought, and I can understand the risk tolerance. Some people are super risk averse, and so the risk tolerance is very, very low, and so they feel really good paying off their house, and they're okay with a guaranteed 2% return on their capital. And I can't fault them for having that risk profile. I think it's a bad move. It's a waste of potential, but to each their own. It's the same thing when I see someone who's a high performer in the workplace. I used to know people who were super high performers who would do amazing as entrepreneurs. They're producing 300% more than the normal employee does, and they're getting a crappy salary, and I knew their boss was taking advantage of them, and I would talk to that friend and be like, you should go out on your own, or go into something where your talents are rewarded. That's how I feel about someone paying off their mortgage. I'm like, just so much wasted potential. It hurts to see it, but to each their own. Some people like the security of a $50,000 a year job when they could be making $500,000 a year with their talents. Okay, next question on the comments list. Hey Mike, this person says, is 70K enough to build off of dividend stocks, or I need to get a high paying job and dump more money into it? Well, aluminum, I think $70,000 is probably not enough to retire on, but you could definitely build a little dividend portfolio for 70 grand. $70,000 in Interactive Brokers could get you $200,000 safely, $200,000 in a dividend portfolio. And a $200,000 dividend portfolio could produce, I don't know, over $1,000 a month in dividends. So does that sound attractive to you? Is $1,000 a month move the needle for you? If it does, then yeah, cool, you totally could. There's a lot of dividend plays that you could, have it. Let's say 200 grand, you put $3,000-4,000 in each position and hold a whole bunch of different positions in a bunch of different good yielding dividend companies. Totally, you could. So yeah, I mean, you probably should still go get that high paying job and keep saving and investing, because $70,000 is not enough to retire early on. And the way they're printing money these days, 70,000, it's not going to get you very far, but it's a start for sure, and you should definitely be investing with it. Okay. Any experience in opening a claim with a contractor's insurance? I've never heard anybody talk about this. No, I've never been through contractor's insurance, to be honest. There's been situations where I've wanted to, where I got some really bad stories. I got a foundation collapse even with a general contractor that just made big mistakes, and we haven't gone that route just because the time and stress with litigation. One of these days, I'm sure I'll sick my lawyers out of principle on someone, but up until now, I've just focused on more revenue. Hey Mike, you making that 10,000 a day selling puts? Anthony, yes. Right now, mostly my strategy is selling puts. I'm basically just running the wheel right now. I do some, I have some bull put spreads where I'm just on the spread as an example. So I've been doing bull put spreads on Tesla and GameStop and stuff where my loss is capped, right? So you can imagine, you do really tight, you buy a put and you sell a put, you're in a really tight range, and the only way you lose is if the share price falls in between that little band range. If it's above, you don't care. If it's below, you don't care. If it's above, actually, it's the best case scenario. So it's kind of a bull put strategy. But the max loss is usually a couple bucks a share. So I'm doing a lot of that. A lot of you can do collars and strangles and stuff, which is great. But the reason I've been doing naked puts on a lot of my stuff is I just want to acquire these companies. I want to own shares in them. And so I just keep selling puts that are kind of close to the money in hopes that I eventually get assigned the shares. So instead of just buying the shares, I instead sell naked puts. The idea being that either I get free money, so they pay me premiums to write the contracts on the puts that I'm selling, so money for nothing. Or the worst case scenario is I get shares at a discount because I got paid premiums to write the insurance on those puts, and they're going to put the shares in my account. So either way I win, but my strategy is really to buy them. Once I own the shares on these companies, I'll probably start selling puts at a price that selling calls on a price that I'd be willing to let those companies go for with a nice little tidy profit, and just continue to do that, right? And that way I get the dividends and I get a little bit of premium. I should be buying more puts than I am. I'm super bullish right now in the market, and so I haven't been buying puts, but I really should be. It drags on your overall return, but I should buy puts because on those down days, it really hurts. And do as I say, not as I do. I really need to work on my strategy. I'm greedy as hell sometimes, some days. Your videos add a lot of value. Right now I'm looking at crypto as an alternative to the options trading that I'm doing right now. Oh, cool. I think crypto is a fantastic space to be in for 1, 2, 3% of your net worth. I don't think it should be a lot of your net worth. If you're going to get into crypto with a bigger percentage of your net worth, I think it's better to go into mining. I think you should probably build yourself some rigs, buy some graphics cards. The reason for that is it's a fantastic return. You could probably get 100% return on your money just with building mining rigs and mining, at least, even if you're paying scalper prices. And you get your entrance into crypto, into the space. And the worst case scenario is you can sell the equipment for MSRP to gamers or to guys who need it for processing engineering files and stuff, right? So the hardware has intrinsic value. The crypto doesn't have any intrinsic value beyond the network and the user adoption. That's what the value is in crypto right now, is the use case scenarios and the adoption. And so I've been known in 2016, 2017, I wrote an article that said I don't believe in, I think crypto, I got Bitcoin at the time when Bitcoin was at $20,000, and that was at an all-time high, and it crashed to like 3,000, right? Shortly after I wrote the article. I wrote in that article about how I didn't think it was, a great currency. I didn't think it has a lot of great use cases, and it really was all about the user adoption. And user adoption and, network, what's the word I want? The word I want to use is like belief, confidence, I guess, in that investment vehicle is entirely shifting with the wind. So someone creates something better and user adoption falls, and it's like MySpace, which was the #1 thing, or Ask Jeeves or Yahoo. No one uses that stuff anymore, right? And so I think that it'll shift. It's tech, and so that's the scary thing. about crypto is there's so many different projects going on right now, and who knows where the future of crypto is going. And I think it's always going to be here. I think for a long time now, people have sort of realized that there's, what's the word I want to use? Like, I think the use cases for the people who want to move money between countries and not be tied between the exchange between countries, there's nice there for business. I think there's some use cases that make sense. But yeah, I don't know. I don't know. Honestly, like, I was wrong, and I've adapted my assumptions based on new information that I'm looking at today. And I'm like, people are parking money here, and institutions are starting to believe in it. Maybe there's something here. It's like gold now as a store of value. As long as people continue to believe that, then it is, right? I believe that people believe. And so I am willing to invest on the belief of all the other people that believe, if that makes sense. Okay, next question. Energy stocks. I don't follow a lot of solar small cap stuff. I don't know. Not my space that I cover really. And I don't know. There's some companies out there you could look at. Super high risk, high growth. I prefer to invest in stuff that's more producing cash flow. So I don't focus a ton on that. I have a little bit of energy holdings, but I'm buying more blue chip stuff. William says, look, concerning stocks, does it look like a bubble to you? I mean, yeah, we're in a huge bull market, but they're printing so much money, right? So it's hard to tell how much of that is the printed money. What are your top 3 stocks or holdings? I'm holding Boeing, GM, and Hyatt options, but leaning towards summer sale. Thanks. I think GM and Ford have some work to do, but there is some potential there. With GM, especially seeing it got hit a couple days back, and I was like, okay, I could maybe acquire a couple shares in GM. I think they've been around for a long time, and they have a competitive advantage if they can get on and adapt to the trend for EV and the trend towards like the Internet of Things and the self-driving piece. That's going to drive. I think that's where cars are going, right? So, as an automaker, you need to adapt and to shift. I like what companies like NIO are doing in the space. I think they've solved one of the major problems, specifically related to their idea of driving into battery stations. They take the battery out of the car, put a new battery in 3 minutes. So you go from an empty battery to a full battery on your electric EV car in like 3 minutes. And so I really like that technology. NIO's the only people doing it. And if they can get charging stations in like North America to do that, I have an EV vehicle. That's my worry right now, is there's not enough charging stations. And then you're stuck there for like 40 minutes charging. If it was like 3 minutes, like faster than filling up a tank of gas, you could switch your battery. And then also, if you're just renting the battery, then there's no worry about the battery dying. Like, your car could go 1,000,000 miles. They can build EV cars now that'll go 1,000,000 miles or more. That's crazy, right? So I think that there's a lot of potential in that space. Boeing, I don't know. I think that travel is going to come back in a big way. So I don't know. I guess all the planes are still depreciating, even if they're landed and not flying as much. But I think there's not going to be as much demand because of what's happened with COVID. It's not necessarily a fantastic play, but I haven't done a ton of research on Boeing. They've been up a ton. I looked at Boeing and a few other companies during COVID, and I wished I would have bought. I was screaming to buy them, but I didn't have a lot of cash then to really double down. I was stuck in real estate, and I wish I wasn't, but it's the situation. What about investing in the USA? So in some places in the Midwest, it can make sense, where you're on good 30-year mortgages that have low rates with great cash flow. But in markets like New York and LA, I don't think it's worth it, in my opinion, other than as an appreciation play. Okay. When you set up your corporation for real estate business, do you do a 3-tier model, holding corp, real estate corp, and property management corp? If not, how did you set it up? So default, right now I just have 2 corps. So, I didn't set up a 3-tiered structure. It's very complex, and from my understanding, you'd have to be doing a lot for it to make sense, I think. You could do the property management corp and the holding corp, and a lot of people argue for the liability reasons. I think just get a good insurance policy to protect yourself from a liability perspective rather than setting up the complex corporate structure. It's a lot to manage the accounts and flow everything between it. Yeah, I mean, it's a couple $1,000s a corp to keep it alive each year. So you're spending $6,000 to $8,000 alone. So if you're gonna have less than 20 properties, I think until you get to 20 properties, don't even worry about that. And then after that, it could make sense. Yeah, I mean, like, so you're talking about the 12.5% or 12.4% active, small business up to $500,000 across all your small businesses, up to $500,000 a year. Is that like a 12.4% or 12.2% tax rate after the small business deduction? And real estate is considered a passive business. So if you're really big, you just hire 5 full-time employees and you don't need the 3-tiered structure. One corporation with 5 employees is an active business automatically. You qualify. So real estate no longer becomes passive if you can get 5 full-time employees or greater. So that's where you don't need a 3-tiered structure. So if you're really big, you don't need 3-tiered structure. If you're a flipping company, you're already an active business, so you don't need 3-tier structure for flips. So for flips, you don't need it. For big companies, you don't need it. If you're small, you don't need it because it's too costly and complex. So it's just too much if you're small. So only if you're middle size, like between 20 properties and 40 properties, would it really make sense as a 3-tier structure, in my opinion. And maybe there's use cases where it makes sense, but again, talk to your accountant and they'll be able to tell you exactly if it makes sense for your situation or not. I'm not an expert. I read some articles, but not an expert on it. Private equity groups and hedge funds are buying entire communities in my area. I'm not willing to spend the money these private equity guys are paying. It's really tough to find cash flowing properties. Do you have to 100%? I think you got to remember these companies make, like these companies that go in, these REITs that go in and buy, they make most of their money on the management. They charge an acquisition fee on every deal they acquire. They charge a management fee and they charge a tenant placement fee, et cetera, so forth. They make their money on fees. So it's their job to give their investor, a 5, 6, 7% return. If they can beat the cost of debt, they're winning, especially at scale, right? So they can just go buy a bunch of garbage, like good properties, but at garbage prices, and price us little guys all out because their goal is to make a 5% return, which is cool because their investors are cool with 5% passive. So they're basically targeting an investor who wants a hands-off, small return. They're borrowing super cheap. They're taking insurance companies' money, et cetera, so forth, and they're just parking it somewhere. They can get a return better than 2%. And insurance companies take no risk. We want a really low return, and it's okay if you soak us in fees. And they do. They soak in acquisition fees and management fees, et cetera, and so forth. That's how they make their money. So yes, those guys are pricing us out more now than ever. And cheap debt is driving their rates of return down, or making it so they can pay more for properties. So yeah, we're seeing a lot of that in the market, and good observation. I'm seeing that as well. Next question. Realtors want to make a sale, investors trying to raise money. Exactly, a lot of pumping. Yep, a lot of rah-rah pumping and institutional buying. That's what's going on in my area. I've not raised any of my rental rates, and rent has gone way up, but it has made it impossible to outspend the private equity. So maybe sell it to the private equity. That might be a logical decision. If anyone has a deal I can own or occupy, let me know. Brock says, hi Mike, if your tenant moves out, is their boyfriend or girlfriend who move in later, never signed a lease, now considered a tenant protected by the RTA? No, that would be considered a sublet, right? Regardless of their boyfriend or girlfriend, they would be a sublet. So and again, I'm not an expert at the LTB. I've parsed it a few times. My understanding is they are not a tenant. And so when the tenant on the lease leaves, if someone else is occupying it, a friend or whatever, my understanding is they are not a tenant. So I'd make sure you get in there and get something in writing from the tenant. Like when they move out, you say, hey, can you send me an email saying you've moved out? Or get something in writing saying they've moved out. That's all you need. Go and file at the board, get an order so you can have an empty unit. Super easy to do. Now, if you let that happen for years and years, like let's say they move out and then the girlfriend's been there for 3 years, girlfriend or boyfriend, whatever, they may have some rights of possession. They continue to pay the rent, right? And if you continue to accept their rent from them, then you're basically acknowledging they're a tenant, whether there's a lease in place or not. If you continue to receive rent, as soon as you start accepting rent from them, my understanding is you're agreeing to, you're collecting rent. So you're kind of agreeing to rent from them, whether there's a lease or not. You could rent a unit out with no lease at all. People rent units all the time, no lease, and just have a verbal agreement and the person pays cash or whatever, and they're considered a tenant because you're giving them housing and they're paying you. regardless of if an agreement exists officially or not. They are protected by the same rights of the Landlord Tenant Board, RTA, Residential Tenancy Act. Jeffrey says, I have a condo I bought at $200,000 and got it appraised at $385. I'm thinking my best option is to sell and not turn it into a rental. What are your thoughts? I don't know. I have to look at the numbers, but maybe. There's so many things to think about, right? Would you buy it for $385? That may be a question to start. What kind of rent could you get? Does it cash flow? If it's not cash flow positive, probably doesn't make sense. I like the REIT move. Speak in facts. Thanks, appreciate that. Why not invest into crypto instead for better returns? I think when you talk about for better returns, Bitcoin could go to $20,000 in January this year. Ethereum could be $1,000 a coin. So there are no guarantee of better returns, so to speak, right? There's a lot of risk and everything moves in bubbles. Like, we're in a bull market for crypto right now. At some point, there will be a fall. And when that fall happens, it'll be painful. That's the time to load up. When everyone's losing, everyone's bearish on crypto, they're like, oh, it's terrible, whatever, and prices are down, that's when you load in. That's when you go down, double down into the crypto space. Right now, I think, I don't know what the top is. Maybe we're here, and the top is here, and maybe the lows are even higher than where we are now. I don't know. I'm investing into a little bit of crypto machines to mine it, do the transactions, to earn crypto, because the downside is I can sell the hardware and get my money back. But with Bitcoin, the only way out is to the greater fool. You have to sell it to someone else for more than what you bought it for. That's it. There's no cash flows, no nothing to it, right? You can stake with it, I guess, and you can make a 4 or 5% yield. So there are kind of ways you can do all right. But, and again, I am pretty bullish on some of the altcoin projects. I do have friends who are super bullish, and I kind of agree with them. There are some use cases that make sense. But for all we know, this best altcoin project, someone else comes out with a better project that does the exact same thing in a more efficient way, and that altcoin's worth nothing. So there's a lot of risk, right? I'm about risk mitigation, and putting it all into crypto is not prudent or really something that I think is. You don't do that with all your net worth. Play with 10%, throw it in crypto. I think it's a great little hedge. It should be part of your portfolio if you want to be diversified, and maybe it'll go to the moon. Who knows? Next question was. You can't find another property to buy. What do you do with the profit? Are you suggesting to buy into the stock market? It's one option. You could do lending as well. As an example, you could secure against a property 70% loan to value and do lending. You'd be safer than having your money in the last 30% in the equity position of actually owning a property, and it'd be completely passive. But yeah, you could do options trading. If you don't want to get into the market, you could just spread trade, in which case you're not actually in the market, you're just trading on the volatility. And so if it moves up, down, sideways, you make money. You just care that the price of the stock moves in some direction. So you can do trades like that, and you can make lots of money. Great returns doing that. So I'm bullish on doing that. You could buy into the stock market if you believe it's going to keep going. I don't know. Soon I'm going to start buying puts on some of my portfolio because I am feeling like some things are overvalued. If we saw interest rates creep up at all, and then there's the arguments that we're going to negative interest rates. It's possible. Some countries have already moved into negative interest rate territory. Like the government literally will pay you to borrow their money. That's a possibility too, in which case everything will just keep going to the moon, right? So who knows what will happen? I don't know. I don't have a crystal ball. I'm watching it intently, and I will pivot accordingly. You can do staking with crypto. That is true. Could stake. You're exposed to the price fluctuations, but you could stake. Next question is, what are your thoughts on Airbnb investment properties in Canadian tourist towns like Kelowna? It can make a lot of sense. If you want to do the management yourself, it can make a lot of sense, James. It can be really good cash flow. How far out do you sell your covered calls? So a place that I like to be would be in the 2 months out and then sell like 1 month out. You don't want to be close to expiration. I think it's smarter to, 2-3 months out and then, get rid of them at the 1 month mark and then buy more 2-3 months out, or roll them or something to that effect. Can you do those types of trades in registered accounts in interactive brokers?
in registered accounts, you're very limited on what you can trade in. Your RSP and TFSA, you're very limited on the types of trades you can make. In your TFSA, you can do long trades only. So bullish stuff, like basically like buying a long call, like a leap call, you can do that inside your account. But you can't short. You can't. There's a lot of things you can't do. You look it up online. There'll be a list of things you can't do. My understanding is anything that's like mimicking owning the shares, you can do. So you could buy a long call, and that would be the same as effectively you like owning the shares, right? You're controlling those shares over time. Oh, we got a super chat from William, $5. Thank you. Mike, I really like your point that everything should be all right as long as money is printed. At what point do you think that printing press stops? William, I'm hoping the printing press stops at the point at which the economy is recovered, right? So at some point, what ends up happening, so if you're printing money, William, right, what ends up happening is you create a bunch of growth, artificial growth in the economy. And eventually all that money trickles down and actually creates real growth. It actually creates jobs. It actually does grow a nation by printing money, especially if you print money and put it in the right hands. So you print money, you put it in the right hands, there'll be tons of jobs, the economy will grow, it'll be overall net positive. So when they print money, the value of our currency goes down, but we actually create some real growth out of all that extra capital. New inventions and ideas come to fruition. Things get funded that wouldn't have got funded for maybe 5 years. So we actually move further forward, and the infrastructure of the country gets updated faster. So there is some positives from printing. There are negatives too, right? I think that. Thank you. Here's a super chat for you. Love your content. A pretend super chat. That's cool though. I don't know when the printing stops. I think it would be good if the printing stopped. I think that would be, I don't know. I think it'd be good either way, really. Like for long term, our country can't continue to print money without any real economic growth. But printing money does create some growth. It won't create as much growth as they're printing right now, but it will grow things. It'll push prices up on everything. It's really the point at which the middle class stands up and says to the politicians, we've had enough. When you walk into Subway and it's $15 for a footlong, I think at that point, all the people on fixed income, the government employees, everyone who's on, relatively fixed incomes, when they start to say enough is enough, that's when they stop, right? But why would the government stop unless someone's urging them to, like, they need their voter base, and their voter base is like, print more money, we're having a hard time, give us more money, loan our businesses money cheap, give us CERB, give us handouts, right? So right now, the politicians will do what is best for them first, and then what is best for their voter base second. So I guess we need a shift, right? And the eventual evolution of printing money is an economic collapse, right? If you continue to print too much. So at some point, the hyperinflation forces their hand. They have to do something, right? So prices go like this, and then when they do something, it goes down, right? They raise interest rates or whatever, right? So at some point, I don't know when the music stops. Right now, it's still going, and there's lots of capital there. I think I'm going to shift my strategy based on market conditions. So if I think that there's a reason, maybe when all the vaccines are out and COVID's no longer an issue, they'll stop printing. Then we need a catalyst. So that's like dry tinder, and then we need something like a spark to create a drop, right? We need something that would be a catalyst. So look out for that. If anyone has any ideas, I'd love to hear. I don't know everything, so I'd like to hear what you guys know. Someone out there, maybe on Instagram, reach out to me if you've got a good catalyst for a market pullback, because then I need to be going hard on buying a lot of puts to protect my huge portfolio. Because I have a large stock portfolio that's extremely levered, and so I think that I would want to protect that if I knew there was going to be something coming up, or if I start to see some downward trajectory, I'll probably start buying a ton of puts just to protect myself as it starts to move. Because once it starts sliding, then you know how the market is. They overreact to everything, right? It's like if stuff should drop 10%, it'll drop 30% because people are irrational, and there's more of that now with the DIY traders than ever before. I gotta wrap this up. I'm like at the hour mark. I'm gonna pick like 3 questions here. Wheel strategy works well when the market doesn't move much. How'd you fare in late February and March when some of these stocks were overextended and dropping 20%? Hardly collecting any premium at the strike prices. You're right. So the wheel strategy does fail in a down market. It's not the best, but again, over a long term, the wheel will win versus just holding the shares. So yeah, I mean, you should be buying puts, right? With a proper wheel strategy, you should be buying puts too, using the premiums from the covered calls, the adapted dividend wheel strategy that I want to put into place. It is too early for EV charging stations. Too early to pick a winner. Yeah, I mean, it's hard to pick a winner, right? If you like the industry in general, you could invest in the industry and hold on for 3 to 5 years. Ash says, I'm looking to buy fix and upper under 400,000 in the best place in Canada. Where do I start? Wherever you live now, probably a good place to start. We have connections, but there's lots of small towns, I think, that are still underpriced with low competition, where you can get in and still renovate relatively cheap. And yeah, I think there's still some opportunities. You can go on up penny stocks. Shut up. Just go buy more GameStop, John. Let's see. Do you invest in startups? No, I don't. I mean, there could be a startup that I'd invest in, but for the most part, I haven't invested in any startups beyond my own. Should you use a discount broker so they give you the commission back after the purchase? Interactive Brokers is who I use because their margin is just the cheapest, and they're fantastic from the margin perspective. Hey Mike, what do you think is the most important thing, just one thing you can focus on, not necessarily financial, the most important thing? Is that like one of those deep questions? Because unequivocally, like the best thing in the world is freedom, followed second only by family and social connectedness. So the freedom is number one. Like being in lockdowns and having no control, that's the worst. So freedom is number one. You gotta have your freedom. And I think FIRE is rooted in that. But like the second, almost tied to first, is family and social connectedness. You need your family, you need that social connection. No man is an island. And so I think your family is number one, your friends, your social network, that's right up there. Of course, like if you look at Maslow's hierarchy of needs, I think it covers it pretty good. You know, your housing, your shelter, your food, you know, your basic needs, that's your number one, right? Money doesn't even matter. Like money's a construct we made up to allow us to trade easier and make all of our different talents, you know, sort of like if I gave someone one of my talents and they had a different talent, how do we equalize what our talents are worth? That's what money's there for. Instead of trading stuff and bartering, we came up with a better system to do it. And so money does, that's what it is. It's oil in the engine. It's just oil. And obviously you need it for your car to run. And it's nice if you never have to go for an oil change. If it's free, you're FIRE. That's the goal, right? So I don't believe in NFTs at all. Same way I don't believe in luxury art. It's just not for me at this point in time. Thank you all so much for watching. Follow me on Instagram if you want to learn about, you know, mining rigs and stuff. I'm just doing a little tiny experiment with a couple of rigs right now. You could hire an IT guy for 20 bucks an hour to help you build your rigs and teach you. That's what I did. So yeah, I started with no knowledge at all. And I have some rigs down below me right now, printing money as we speak. There we go. Oh, I'm still alive. Anyway, see you guys. The secret to unlocking wealth for you is 3 levers. Spend less, earn more, and maximize returns on the difference. Remember, it doesn't matter what your return on investment is if you have very little to invest. So start by cranking down your spending. Find ways to save even a couple of bucks to get investing. You know, even 10 bucks a week, 10 bucks a day has huge impacts. You invest 10 bucks a day over 10 years, you're a millionaire. So it's even a couple of bucks here and there can make a huge impact. Try to find ways to earn more. And then once you've done that, then it's all about the return on investment. And we'll talk about ways to invest your money smartly. So spend less, earn more, maximize returns. See you guys next Wednesday for the live stream. Bye, everyone.